What is the logic? Particularly if you are the parent company of a social media platform in doing this.
We've seen several companies enter the strategy recently to become Bitcoin treasury companies, Bitcoin acquirers as their core focus. It's important to differentiate that from companies that have added Bitcoin to the treasury for the purpose of diversification or growing the treasury. And the market is differentiating between the two. The relative size of the Bitcoin treasury is important for how it's valued by the market. So for Bitcoin treasury companies, what we have seen is that the market provides differentiation across a few measures. So first, we see the method to acquire Bitcoin being important. Is debt used? Is equity sold? And what are the terms of the debt? We've also seen that brand and trust in the management team is important. And I think as the space matures, having a Bitcoin business that generates yield across market cycles will also be valuable.
That's interesting, though, because that name is particularly volatile from its equity perspective, from the stock story. What does it tell you about Bitcoin? You know, that it's held on a balance sheet in treasury, the long-term view of what will happen with Bitcoin.
It says that Bitcoin has really matured. So with the introduction of Bitcoin and the acceptance of the Bitcoin spot ETF, we saw the Wall Street investors really identify Bitcoin as an asset that belongs in people's portfolios, institutional portfolios, and that is different and distinct from other crypto assets. Now, as Bitcoin has matured, the Bitcoin treasury strategy is doing the same. Of course, this is something new, but as multiple players enter, we are beginning to understand how the market will value this strategy. We've seen the emergence of new metrics, in fact. And in early May, Blockstream CEO introduced a really interesting metric for evaluating Bitcoin treasury strategy companies and their execution, and that's pace of MNAV cover. And so what that means is, well, taking a step back, MNAV is a metric that measures companies' Bitcoin net asset value. It's calculated by dividing enterprise value by the company's Bitcoin NAV, and months to MNAV cover is a measure of the pace with which a company can acquire Bitcoin to justify the premium. So if the market notes that a company has grown their Bitcoin per share 2x over the past 18 months, for example, as MicroStrategy has, that can justify a 2x premium.
Alyse, what's interesting is, of course, you've been in this game for a very long time. Not meaning to age you, but like 2013, like that was just 5 years after the white paper on Bitcoin, and you come in studying it from an institutional perspective. The store of value we now see being played out in terms of having it on Treasury. But what about actually as a decentralized finance use case as well? Because that's where you've been focusing investments.
We've seen companies in the Bitcoin as a store of value and investment space be pulled into providing other services and a more full banking experience for their user base, both for retail users and for institutional clients. By that, we've seen users demand and successfully receive from these companies tools for lending, for borrowing, for yield generation, so that they can be fully banked by their Bitcoin providers, the companies that they've trusted to onboard to Bitcoin with. Now what we're seeing as technologies have matured is the introduction of not just traditional finance tools, but also DeFi tools, those that have been tested and seen early product market fit in crypto spaces have matured to launch on Bitcoin to provide decentralized finance, all the same, borrowing, lending, but in a manner in which is more consistent with crypto principles.